Vincenzo's Go Crypto Investing, this August the 16th, 2025, early morning update here. You can see some of the news that we're looking and trending at over the weekend is spot Ethereum posts 59 million outflows, breaking 8-day 3.7 billion buy streak. So 59 million out, but nearly 4 billion in. So I would say all in all, that's a very healthy week for the Ethereum ETF. As hedge funds continue to buy and corporate entities continue to buy up these ETFs. And they're trying to buy up all of the Ethereum and Bitcoin themselves every time a retail sells and takes their profit. Some people, 30,000x returns, but they're buying up all the Ethereum. They're buying up all the Bitcoin ETFs, right? They want to own it all, and they don't want anybody else to own it, and they want to manage it all. So the goal here is, and this is part of why your bell notification, commenting down below and subscribing to the channel, because the truth of the matter is the goal of the spot ETFs that are all across the board and the big players like BlackRock, the hedge funds, corporate entities, micro strategies, the reason they're buying up all these Bitcoins and ETFs, and because they want to control it all. That way, if you, the average guy and girl, and the public, the retail, us, they want us to buy into their ETFs and pay them a management fee to manage so they can get rich as long as the asset's alive. Whether it goes down 99% or goes up 9,000%, they make money by managing the account. So the more money that's in the account, the more money they get on their fees, right? That's why they want to own all the Ethereum. They want to own all the Bitcoin. And that's why these ETFs were created. When they were created, the BlackRocks of the world are buying up all the Bitcoin and all the Ethereum, and they're owning the ETFs. And if there's 20 million Bitcoin and the corporate entities and the hedge funds like BlackRock and the rest of them own all 20 million Bitcoin, and they're only available to buy within an ETF to get exposure to the Bitcoin, but you don't own custody of that coin, you're paying for a management fee now because you can't actually own the coin. That would be like if you weren't allowed to own a gold bar, but you had to buy the ETF. You never could physically own the bullion, and you had to pay a management fee to get exposure into the physical bullion, right? Because you couldn't own it. That's the end goal here, what they're doing with the corporate buys, with the hedge fund buys, and with governments in different countries buying. They want to own it all, so you have to rent it, essentially, from them to get exposure. So if you own it, keep it, right? That's what's actually going on here. That's, at least in my own personal opinion, that's the dirty little ulterior motive. It's what's been going on. XRP price prediction reaches $30 in 2026. Savvy mining, blah, blah, blah. I don't think it's going that high next year, but I think $4 to $7 is possible. And if we look at the Bitcoin price, after getting off my crazy conspiracies on what's actually going on with the ETFs and the corporate entities buying it all up, let's get into what you guys actually care about right now. It's the price, and the price is still trading sideways, still near its all-time high, right? You can see if we bring out our industry exclusive purchasing tool here, not that lane line tool, you can see we hit the all-time high here on July 15th. Then we came down to the 50-day moving average. Then we briefly touched at 124,576.54 cents, a new all-time high. And then we came back down, which is what you would expect. But we're still above the 50-day moving average that's uptrending. And then obviously the 100-day moving average is just above and slithering along with the uptrending multi 3.5+ year rising channel, major pattern, macro time frame support, right? Where if you broke that, that's very critical in a market structure structurally changing, right? And that's what I'm trying to say and spit out there. But right now we're above the 50, we're above the 100, we're above the pattern support, and also the 200-day moving average we're above. And what you're looking at right now still is if you continue this uptrend, your upside target is between 144,000 and 150,000 that we have marked right there, right? Just below the major upper resistance in this rising channel, and then you would see a big healthy consolidation before a relief rally, right? That's the bullish option, and it's trying to do that, but obviously there's major overhead resistance and manipulation there to make retail think and jockey and bounce back and forth, where you've seen $1 billion worth of liquidation on longs and shorts just through this, right? Because everyone's playing on leverage. It's 20x, 50x, 90x. Some sites offer 150 to 200x leverage, right? So a price, if you're at 100x, if the price moves up 1%, and you say it's going down, or vice versa, you say it's going up and it goes down, you get liquidated, your whole position. And who walks away with that money? The trading site, the hedge funds, the corporate entities, the manipulators of the market, right? They take your money away, and the net move of the price over a month and a half was net zero. You're right back where you started, but yet there was billions of dollars in liquidations, longs and shorts, fighting over the same $5,000, $10,000 range. And at the end of the day, the price did absolutely nothing. And if you were to just bought it or just shorted it without leverage, you wouldn't have lost anything because you wouldn't have got liquidated. But they make it like gambling, and people get 10x leverage and go, well, I'm making 10% every percent if it goes up, and I say it's going up and I know it's going up. Why not do 50x, right? And then it blows up in your face on a wick. And that's all they're doing there with that manipulation, to siphon more retail money out when you should be long-term hodling. You should be buying your assets, whether it's crypto or like I do a lot of gold and silver mining companies. You buy it and you hold it. Your 401k, you buy, you hold until you're ready to sell. You don't try to trade in and out. If you like gambling like I do, I have a separate small account for day trading, or gambling as I call it, right? But my investing is buy and accumulate, right? And that's all I do with that. And you can see with the Bitcoin price, it's essentially went sideways, right? So that's the upside target. The downside target, everybody would like to know too. If you broke the multi-year pattern, you'd be looking at a hit at the 200-day moving average, sitting there at 102,000 and change. It's uptrending. And then obviously the horizontal major underneath support of $97.264. This is the major, but if you broke this, there could be a local collapse down to about 86,000, right? All the way down to about here. Where is that at? 90,000, a $7,000 move to the downside. So that's what we're looking like in the Bitcoin. The Ethereum price, we talked about briefly yesterday when I was on the move, that it would make perfect sense to come down in green, right, and bounce down just shy of the all-time high, and you retap the pattern support, which is the megaphone pattern support, and we'll briefly show you that, even though you guys that are following, there's your megaphone. See how it looks like a megaphone? There's where the pattern uptrend started. There's your horizontal multi-year resistance at the megaphone neckline, and there's your descending, falling underneath support, forms a megaphone, and then the breakout, you have a technical target of $10,000. But now that we know we're above it, in the short term, which would make sense, is just like you did here. We're going to pull out again our industry exclusive tool. Just like you did here and fell down and tapped a major support level that you broke up through, that was a major resistance. You tapped it, confirmed it as support, and that's what led you through your next level. Now you're doing it again. You're just below the all-time high. You get rejected. You come down to the megaphone neckline, which used to be major resistance. Now you tap it as support just like that, and then you bounce to the next level and blow through the 48.33. So if that happens, this would be a big buy signal in the short term if it hits 4,089, if it holds it, because then you'd be looking at probably $5,600 and an initial push past the 48.33 in Ethereum. So that's what I'm looking at in the short term for Ethereum. Obviously, the major support level is a 34.98 underneath. The 50-day moving average is just below that, but you want to hold the $4,000 to continue this uptrend. The XLM price is the same thing. We know where we're at there. We have the moving averages below us, but what we're looking at here with the XLM price is as long as you're below this 43 cents, we know you're extremely short-term bearish. This is a bearish formation right here, and the next level to the downside on a targeted drop would be past the 39 cents, and in between the 39 cents and the 36 cents, the top part of this major support level that you hit here and had a big rally. So you're looking to get back over this 43 cents, but in the short term, a drop looks likely down to 39 cents. You would want to hold that, or you would come all the way back down to this 36 cents. You can see the 100-day moving average in blue is just below that, right? Then you have your weekly time frame 50, your weekly time frame 100-day moving average, and then in green there, your weekly time frame 200-day moving average. But this is a very critical spot where we're at in the XLM in the short term and the medium term, meaning the next 1 to 3 months. Do we continue up? Do we breach the January high? Do we take out the 88 cents and try to push towards $1, or do we have a big downturn coming in the short term? These are the levels that you need to watch: the 43 cents in the short term, the 50-day in the daily, the 100-day in the daily, and the 36-cent major pattern support box. Because if you breach through that, like you bounced off of here, you would fall very quickly down to the 31 cents. On the contrary, if you get back above this 43 cents, the 55 cents remains your major overhead resistance. The XRP is the same thing from a different price level, and you can see they're just above. XRP is just above the 307, which is your short-term support level, but this pattern looks bearish. And if this does break down bearish out of this fall and consolidation, and if it goes down and breaks down, this would get you all the way down to the 100-day moving average, right? So if you slip the 307 and crash through the 294, this local pattern would drive you down to 270, major support level, right? Something that you bounced off of just above it back there in early August. That would be where you would go if you fall through this 307. And I don't think the 294 would be able to hold you, because you've already used a wick and a wick, and you used it back here. I think it would drop straight through to the 270. On the contrary, if you can hold, and the 255 would act as a major magnet, because the 200-day is slithering and sneaking and stalking that 255. And by the stalking of the 255 with the 200-day moving average, a move down consistently below this 307 on a confirmation like it tried to do there, but then you had the relief rally back here in August 8th, 7th, and 6th. It would act like a magnet and suck you straight down to the 255, and then likely have a massive rally back to the 307. But that's all speculation, of course, by me. But I'm just giving you some of my opinions, trying to decipher and figure out what would make more sense as we try to break down the computer algorithms in the short term to try to see what the actual computer is trying to fleece the most people they can before it actually moves to the ultimate goal. And what would make the most sense here is a brief dip to the downside in the short term before a nice rally to get more day traders and leverage, more importantly, traders out of the market. But that's what I got right now. I got to run to the butcher to buy some barbecue food to go sit by the pool and try to soak in some hazy, cloudy sunshine before some scattered thunderstorms move in on this late summer weekend day. Peace and love. The Rock's Eyebrow J.